Okay, assalamu alaikum wa rahmatullahi wa barakatuh, everyone. We'll inshallah wait for kind of few people to join in before we jump into the introductions, inshallah. But before we do that, just a little bit of update on exactly what has been happening kind of behind the scenes during the last, you can say, a week or two. So we didn't have a show last week due to kind of various factors, and also we are actually, this is kind of the second last show before we take a couple of weeks off as season one. So this is, you can say, the second last show of season one, inshallah, which is happening obviously today. Now, beyond this, the plan is to have a different series altogether, different from obviously entrepreneurship and finance, which we have been discussing in the last, you can say, almost 2 months now. So like I always say, guys, please start sharing the feeds, inshallah, that we can, inshallah, officially start the introductions. So, in alhamdulillah nasta'inuhu wa nastaghfiruh wa na'udhu billahi min shururi anfusina wa min sayyiati a'malina may yahdihillahu fala mudilla lahu wa may yudlil fala hadiya lahu wa ashhadu an la ilaha illallah wahdahu la sharika lahu wa ashhadu anna Muhammadan abduhu wa rasuluh. Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. So guys, inshallah, start sharing the feeds with as many people as you can on various kind of streams, YouTube, Facebook, etc. And before I jump into the intro to the speakers, inshallah, this is an extremely important topic from various angles. And not only that, we are trying to provide you with an opportunity to see ways of halal investment, but also how you can create your own startup culture, how you can actually have access to startup funding. And we'll be delving into more details as we proceed. So we have Brother Ibrahim Khan and Brother MOHSIN Patel. Both are co-founders of Islamic Finance Guru, which is a startup which started in 2019 and 2020. Obviously, we'll be discussing more about exactly the history behind the startup and exactly how did this come about. So Brother Ibrahim Khan, mashallah, he is a PPE from Oxford with an ijaza in the memorization of Quran from Egypt as well. And he has also been studying under Sheikh Akram in Cambridge, I presume, or maybe in London. Before actually he has been working kind of in the various the funds space within England, specifically London. And he has started Islamic Finance Guru as a full-time, career, or you can say a startup as a founding member in 2020. We have Brother MOHSIN, who is a co-founder, and I'm assuming that both of you met in Oxford, or maybe you were friends before that. We'll get to know that, inshallah. And he also specializes on the legal side. And he also is an expert in the corporate and the commercial matters. So Brother MOHSIN, his expertise is corporate law, along with ethical considerations within Islamic finance. And we'll get to know his story, inshallah, in a while. So this is our audience for today, alhamdulillah. So yeah, so Brother Ibrahim, so let's actually get down to kind of the Q&A, the initial one. And we would like to obviously know your individual journey, developing IFG, what have you been doing before that? And why did you feel the need to develop these Islamic products?
Yeah, sure. Jazakallah khair, Brother Nokhes, for having us on. It's an absolute pleasure to be on. And Jazakallah khair, anyone who's watching us babbling on. So Islamic Finance Guru is a website. It's a portal where you can compare Islamic finance and halal investment options. But it's bigger than that. It's more about our mission. And our mission is to help Muslims who constitute a quarter of the world's population, who happen to be about 20% poorer than the rest of the world, to help Muslims get back to even keel, to get them back to a level playing field. And we think that there's two key ways that you can do that. One is by helping every single ordinary Muslim investor manage their money better, get on top of their finances, get out of debt, find halal investments, all of that stuff. And hopefully that will really increase the wealth of the Muslim community. Then the other key thing is IFG.BC, which is our angel syndicate, where we help Muslim entrepreneurs create the next big thing. We fund startup. And both of those two things come together, and we hope that in the next, decade, 2 decades, however long we have life, we can create, a world where Muslims actually get back to a level playing field. And in terms of, how this whole thing started, it started in 2015 as a labor of love, where we were running a blog, IslamicFinanceGuru back then, and we were writing for ourselves because I was studying my Alim course at the time. I was doing my master's, so I always enjoyed Islamic finance. But it was only, when I went on the internet, I found that there wasn't really anything available for me. There was either stuff that was really simple or stuff that was really complicated. There was nothing in the middle, and nothing that spoke to me as a professional. And so then I started writing essentially for myself and sharing my research. People found that quite useful. And we just plugged away at it for many, many years until finally, in January 2019, we decided, you know what, this is a big enough mission. This is something we care about deeply. Let's try and put it on a more commercial, sustainable footing and see what happens. And alhamdulillah, things went really well. And we both packed in our corporate law jobs. MOHSIN packed it in I think October last year. And I packed it in February this year, just before COVID, and we've not looked back ever since.
Alhamdulillah. Okay, great. We'll discuss COVID in a while and the repercussions because of COVID and the kind of the less disposable income with individuals and how it has impacted kind of the startup environment. So, Brother MOHSIN, kind of the same question to you, my brother. What is your individual journey to IFG, and what is your need to create Islamic finance products?
Sure, yeah, Jazakallah khair. I echo Ibrahim's gratitude to you in terms of getting us on the show. Really, really nice to be on. So yeah, alhamdulillah, I actually somehow managed to disconnect for a little while there, so I'm not exactly sure what Ibrahim said, so apologies if I repeat anything. But yeah, me and Ibrahim, we met back in Oxford, where we studied together, as you kind of guessed, and we've done lots of things since then. And primary amongst all of that has been our, I guess, focus on doing something that makes an impact on the world, from an Islamic point of view. And when we sat down and thought about everything that we could do, this was the thing that we thought would be our contribution in many ways to the ummah, and with Allah subhanahu wa ta'ala's help, hopefully we can make a small impact, because we think that there's lots of things that are wrong with our kind of situation in the world right now, but when we think about the solutions, they're not really that easy to grasp. Like, there isn't something you can do overnight. But one thing which isn't immediately obvious, that has a major impact on how Muslims kind of behave in society and are perceived in society, is actually finance. Because as soon as you improve the financial condition of a people, then that has an impact on a whole host of things to do with our lives. And that is not something, as I said, that you can change overnight, but we're hopeful that through the things that we do, which is comparison and basically helping people to essentially become wealthier, even if that's by a few percentage points over a global population, that makes a huge difference. So that's big enough for us to leave very successful careers for, and it was a big decision for us personally when we made that choice at the kind of back end of last year. But alhamdulillah, I think that we are heading in the right direction. We've obviously got lots and lots to do, lots and lots of plans, but that's the life mission now, alhamdulillah.
Alhamdulillah. May Allah reward both of you, brothers, thinking about obviously the situation within the Muslim communities, especially, where we are in minority, because that's something which, we need to obviously uplift the communities which are in existence, whether they're in the Western world or, wherever they may be. And this is kind of, the mission of our series of Islamic finance, is that where we started actually giving people an overview of what Islamic economics is all about. And once, they've got this overview of exactly what this is about, Now we are discussing kind of the products, the models, what are the opportunities available. So, Brother Ibrahim, now coming to you, what are the fundamental principles on which Islamic funding and finance should be standing in your view?
So there's a few different things. I think the first is that you try and avoid riba, interest. You try and avoid gharar, which is uncertainty, and you try and avoid maisir, which is gambling. That's really high level stuff. But then in terms of really practically, what do I mean by Islamic financing? It's either debt or equity. And equity is where you buy and sell shares or a percentage of the revenues or something like that in a venture. So, for example, if we're both setting up a company, I say to you, look, I'll put in 100% of the capital. Let's share the equity 50-50 and let's go for it. So that will be some kind of mudaraba structure. Or we might both be working on the same thing, and I say, I'll put in 50, you put in 50, and we both work at it. That's a musharaka type structure. And then you've got debt equity, debt capital. So there, in the conventional world, you're just taking a loan from a bank. You can structure that, however, in an Islamic way, and there are multiple structures that you can use. Things like murabaha, where you are, let's say you're buying a car for £100,000, and you don't have that £100,000, the bank will buy that car for you, and it will sell it to you for £120,000 to be paid over a deferred term basis. So that would be a simple example of how a debt-based financing model could work. You can use other debt-based financing models where they use ijara, where someone is renting you that car instead of you actually buying the car. And then there's a few other ways that you can do it as well. But high level, those are the kind of big two models in play that people can rely on.
Okay. And again, there's a lot of debate and discussion, and again, we are not going to, within this show, we are not going to do many details with regards to how the structures actually do work. That is something which obviously, the audience need to go to their local scholars and discuss with them, inshallah. Now, what is your comment on basically on the view that Islamic funding, saving, and investment schemes are a fad? And Brother MOHSIN or Ibrahim, anyone can answer.
Yeah, I can go for that. Yeah, I mean, it's often it's one of those things that is often cited at dinner parties and things like that, and the uncle get into a debate about Islamic finance, and we've all been there. Yeah, and actually, we've had these emails and this, that, and the other, and we've recorded podcasts in the past where we've discussed this topic. And for us, the thing is that we have to call the market as we see it. So we are not saying that all the Islamic products that are in the market right now are absolutely perfect, and there's absolutely nothing wrong with them. Of course, there are deficiencies, but they, in the wider context of things, are operating in a market which is not geared for Islamic products, right? I mean, just here in the UK, for example, if you are an Islamic bank, I mean, the biggest Islamic bank and probably most well known is one called Al-Rayyan, which I don't know if you're familiar with, but they are operating in a banking system alongside, Barclays and HSBC and all these guys, and it's simply not fair to expect somebody like Al-Rayyan to come up with products that are absolutely 100% Islamic in the truest sense. So we have to understand that reality, and we have to understand at the same time that the Sharia demands of us to do things in a certain way. And I always use a really, really simple analogy with these things, which is that people often say, oh well, if you end up paying more money over a period of time, then it's just interest, right? And I often will just say, okay, well, the chicken in the local supermarket, which you call haram, is also just chicken, isn't it? And yet we still go through this ritual of making things halal. And that's a really simplistic way of putting it, but it does actually help people to kind of understand these things, that Allah hasn't forbidden profit or trade and all of these kinds of things. He's forbidden very, very specific things, and if He has given us the tools and the scholars and so on to be able to structure things in an Islamic way, then we should use those things, and we should try to please Him in everything that we do.
No doubt, and obviously it's always a struggle. I mean, no one is denying the fact that it's a struggle, but at the end of the day, mashallah, people like Islamic corporations, like companies like IslamicFinanceGuru, Primary Finance, different kind of individuals. Brother Tariq, I always mention him because he's the pioneer. I always regard him. He's my hero. I always say that. Tariq al-Diwani. So, and basically, there is an effort which has taken place over so many years, and not only in UK, you're talking about Malaysia, Jordan, Saudi Arabia, and kind of Pakistan, other Muslim countries, where there is a concerted effort. And there are two schools of thought, obviously. One school of thought is that you kind of ignore and you just stay away from all of this. And the other thought is that you try to, jump into it and try to find ways to how to actually make it work for the individuals. Because at the end of the day, as you rightly pointed out, that, we have to make Allah subhanahu wa ta'ala happy with whatever we do. And Allah subhanahu wa ta'ala has not forbidden trade. That's the bottom line. And that is the message we are trying to convey, that don't stay away from these things, try to do your homework. But again, organizations like IslamicFinanceGuru, they are there to help you, inshallah, structure the deal. They're there to help you, make you understand exactly, how things actually can work in a halal way. So it's not all doom and gloom. This is the message really, from our side. So Brother Ibrahim, so what is the difference between your model of startup equity? And in fact, if you can give us a brief exactly of your different products, and then talk about kind of your model and compare it with a conventional private equity model, if you can please do that.
Yeah, sure. So there's a few things to unpack here. The first is there's a difference between private equity and venture capital. Private equity is typically helping larger, maturer companies, and it is looking to give them money for them to grow. And you're going to be using debt as part of the deal structure. So a good example of private equity could actually be the recent takeover of Asda by the by the Pisa brothers, which was funded in significant part by debt. And that would be a classic example of a private equity deal. Then you have venture capital, which is giving money to early stage startups. So startups that may not have any track record or history, that are very, very new. And there you will not be using any debt because of a number of reasons. The first is because the startup doesn't need any debt because it's so high risk already. There's no point leveraging the return. The second is because the company won't actually get any debt from anyone anyway, because a bank is not going to lend to an early stage startup. So what we do at the Angel Syndicate, IFG.VC, is we invest in early stage startups, and we're naturally operating in a space which is fundamentally Sharia compliant. However, within venture investing, there are a few things that you still need to be aware of when where it can get haram. The first is that the company itself needs to be Sharia compliant. And that's normally quite easy to figure out, but then sometimes it gets a bit tricky, because what about if you've got a platform that is providing services for estate agents, but then also one of the services is a financing product or something like that? How do you work that out? So we do that. And then the other thing is you need to watch out for debt instruments, such as loan notes and the like, because they can come in as well. Then you have preference and preference shares, and you need to think about how to structure that from an Islamic perspective. So there's a few different things that one needs to be aware of when it comes to venture investing in an Islamic way. The high level, this whole area, the starting position is it's halal. Whereas high level, I think the starting position in private equity is it's probably not going to be possible.
Okay, that's very wisely said. Okay, and what about the products? So it's just the venture capital, or you're thinking about any other products also? So that is your primary product?
No, so I mean we've got two key things. One is our halal investment comparison engine. So if you go on IslamicFinanceGuru.com/halal-investment, you'll see our comparison platform, which allows you to compare between all the different halal investments that we have analyzed and reviewed and made sure that they all stack up side by side. You can just review them very easily, filter down for the different kinds of assets that you have, and invest in those companies. Then we've got the Angel Syndicate, which is IFG.VC, which invests in early stage startups. If you're a Muslim investor, well, if you're an investor full stop, you can be a part of that syndicate. The minimum investment per deal is £2,500, and we will typically bring 1 or 2 deals a month. And these are quite high quality deals compared to, because there's lots of startups out there, but the startups that we invest in are typically from the top 5% of deals in the UK, mostly. And you can get a sense of that by the kind of people that we co-invest with. So a recent deal we did was in a company called TrustShare, and co-investors there included people like the ex-CEO of NatWest, the founder of Zoopla, who's a multi-billionaire now, various different other leading tier 1 VC investors. And we've co-invested alongside people who are early investors in Deliveroo, Babylon Health, DeepMind, and various other startups as well. So, the kind of deals we get, I'm hopeful that they're quality deals. And the whole idea behind it was, when we started it, was, look, we're investing in these deals. Why is it that we shouldn't open it up to other Muslim investors? And so that's how the whole Angel Syndicate started and came about.
And this is obviously open to investing from any part of the world. Obviously, it's not restricted just to UK. Yeah, I think you. Yeah,
exactly.
Okay. Yeah. So that is the bottom line, because for the audience, which for us mostly is from Pakistan and the Middle East, this is very important for you guys to understand. And this is from where really we wanted to get Brother Ibrahim and Brother MOHSIN on the show today, to let you guys know that if you have spare capital, and again, the startup requirement is not a lot, it's £2,500, which is not a lot. So if you really want to, and we'll be speaking about, inshallah, the kind of the average returns, which historical kind of average returns, which Brother Ibrahim and Brother MOHSIN will be speaking about in a while. So Brother MOHSIN, also, if you can speak about the various kind of startups you've had investments from individuals, what type of industries, what kind of consumer market, for example, is a big thing nowadays because of COVID. So what are the type of industries you're focusing, or you're just open to anything?
So with startup investing, so I'll assume no knowledge on the part of your audience, because the thing about the startup world is that it's a very, very weird world until you kind of get into it and you have some experience of it. And the first reason I think it's really weird, if you're coming into it completely fresh, is valuations look really, really high. So to give you an example, if you are investing in pretty early stage company, it might have been around for a few months. They've probably developed their prototype, or maybe they have their first few customers. Realistically, in the UK, you're looking at a valuation probably of about £4 or so million to be able to, for the company as a whole. And when you compare that to property, or even other small businesses that we're used to, it seems absolutely crazy. But the key thing that you have to remember with startups is that we are not looking for returns of double or triple or even quadruple. Really, what we're looking at with startups are those really, really, really big winners. So think, investing in Google early doors, or investing in Uber early doors, or Kareem, or whoever it might be. Yeah. And those are the sorts of returns that you're looking for. And, financially, I mean, I don't even need to tell you what early investors in Google are likely to have made. Like a couple of £1,000 then is probably make you a billionaire or something ridiculous by now, right? So that's really the key thing to understand with startup investing, that you're looking for these things, these early stage companies which can blossom into something really, really, really big. And what that means is usually, I mean, almost always, they're going to be tech based, because tech is something which scales and can scale in a really big way. And it has this thing which we call zero marginal cost. So what that means is that, you know, once you've got the tech in place, you can roll that out globally and it doesn't cost you anymore. Whereas if you're, I don't know, a car company, it costs you money if you want to then expand to, you know, Germany and Italy and France and Pakistan and all these other places, because you've got to hire people, you've got to open factories, etc., etc. So usually, you know, startups will be tech-based. They'll have this potential to be globally scalable. They'll be operating in a market which has either lots of space for disruption, so, you know, things are being done in like a really archaic way, or probably even better is they're creating an entirely new market. So think about something like Instagram. You know, when Instagram was pitched, you know, it wasn't like, oh, we're going to do this better than such and such and whatever. Like that just didn't, the concept didn't exist. And so if you're creating a market, there's absolutely no limit to the potential. And then you're looking really at how, you know, in the long term, how defensible is this business? Like, could somebody else just create this overnight as well? And, you know, one of the things that people often ask with startups is, oh, could, you know, Google or Facebook or Amazon or whoever not just do this as well? And that is a valid question, but often that shouldn't put you off either, because typically what happens in, you know, those types of big corporations is, number one, they were startups one day and they understand how innovation can quickly, you know, grow. And number two, because there's so much now going on in these big companies, it's cheaper often for them just to pay 500 million or 1 billion or 10 billion to buy that startup. And a good example of that is when Facebook bought WhatsApp. You know, Facebook could have developed, you know, a chat app. It's not, I mean, I'm not a developer, but it can't be the hardest thing in the world. But, you know, they decided to buy WhatsApp instead. So yeah, for us, we're pretty open to any kind of sectors, but the key things we're looking for are those kinds of things that I just mentioned there.
Okay, that's brilliant. I think that's very, very, I think, firmly put. And another thing which actually I would like to also mention here is, as Brother MOHSIN is mentioning, that it's, I mean, within the startup culture, there are two things which basically I think, or obviously you would have a criteria to kind of select the startup which you are bringing in to your platform. Now, for kind of the founders also, now my other question is that from a founder's perspective, you can say maybe type of a Y Combinator, but not exactly that. Yeah, but obviously you are kind of, you know, looking at how the total market valuation, potential market valuation of a particular startup might be 6 years down the road or 3 years down the long road. Obviously, this is what you're, you know, kind of looking into. So, what is your criteria of selecting a startup to bring to your platform? Yeah,
sure. So we're looking at early stage companies raising either pre-seed, seed, or Series A. What that means is they're just different names of, you know, the different points when a company will raise. A pre-seed is when a company probably doesn't have a product. It's got an idea, it's got a team, and they're just going to raise a bit of money to get going. That's high risk stuff. Then you've got seed, which is they've got a product, they've got a team. It's not really got anywhere yet. There's no traction. There's no product market fit. They're just going to see what happens and what the market reacts to their product with. That's seed typically. And then you've got Series A, which is the product works, the people like it, and everything's the team has been properly built out. And now we're ready to really accelerate our growth. And we're going to put money in, and that's going to be used to grow the business. So that's Series A. And then you've got Series B, C, D, E, F, G, however much you want to go. And that's really continuing that journey of growth. And we will typically invest up to the Series A stage. And the reason why is because past the Series A stage, you're looking at large amounts of money, tens of millions of pounds potentially. So it doesn't make sense, and angel investors can't do that. We will invest in 1 or 2 deals a month, somewhere between the 250 to 350K mark per deal. and we will be looking at startups primarily in the UK, although we're open to abroad, who meet probably the following criteria. One is, as MOHSIN said, the large target market. It needs to be a big enough space for this company to become a unicorn. We need to look at the founders, that they're credible. Do they know what they're talking about? Are they good at what they do? Are they able to sell well? Do they gel together as a team? Are they people who have credibility? Are they bright people? All of that stuff is very important as part of the diligence. Then the other thing we look at is the product itself. Okay, so we've got a good market, we've got a good team, but do they have any idea about what they're building? What is the solution here that they've come up with? What do their clients say about it? What does the market think about their product? So we look at all of those three things. And then finally, we look at the deal terms. What are they raising at? How much are they asking for? Is that fair from an equity perspective? Typically, at each round, you're looking to give away somewhere between 15 and 30%, 15 and 35% in equity. And we typically think that giving away about 20% is about right. It's about fair. So that's kind of the process that we look at. From start to finish, it usually, I would say, it takes about two and a bit weeks. Sometimes it can take longer. Sometimes it can take much shorter. It really depends on the deal and how things go.
Yeah. Okay, mashallah. So I hope, inshallah, this will be beneficial for individuals who actually are looking for startup funding. As Brother Ibrahim has mentioned, that they might be open to kind of having startup outside of UK, although there will be a jurisdiction and law and legal kind of processes which need to be kind of looked into, but that's a separate discussion outside the scope of this particular show. So now, basically, the next question would be that in case of bankruptcy of a startup, God forbid, then what is the process? What is the due process? What is the exit criteria? What happens?
Sure, I can take that. So the thing to remember with startup investing, earlier I talked about how it's so kind of strange when you're out of the community and you're trying to just get into it and understand what it's all about. One of the key pillars, I guess, of startup investing is that it's extremely high risk stuff. We're talking here about investing in something which, as I said to you, we're trying to be the next Google, etc., and the chances of that are so small that you can understand how that then maps onto your investment strategy. Because for every 10 investments that you make in startups, it's likely and it's expected, and you should expect that you are going to be waving goodbye to most of the money that you put into startups, and that is just a cold, hard reality of startup investing. And that's why the common wisdom with startup investing is that you shouldn't be putting more than probably 20% of your overall portfolio into startups. Like, this is a bit of your portfolio which is high risk, high reward. If it does really well, it'll really propel you, but you should kind of go into it with the mindset of, if I lost all of this money, would I still be okay? Not to mention the fact that it's also very illiquid, i.e. you can't just invest in a startup today and then 1 year later go out on the street and say, oh, hey, would you care to buy my shares in the startup? So that's just really high level, the way to think about startup investing. And if you get to that point, or perhaps when you get to that point where one of your investments has completely flopped and the company is liquidated, at that point, you should be very much prepared to wave goodbye to all of the capital that you have invested in that particular startup. Now, Ibrahim mentioned earlier when we were talking about Sharia compliance about things like preference shares. Now, for those of you who aren't familiar, this is where usually professional investors like VC funds, what they will say is that we will invest, but we want a different kind of class of share to all your other investors. And that different class of share, what it's going to mean is that if you go bust, we get basically the priority on whatever is left in the company. So that, maybe there's a bit of cash left in the company, maybe there's some assets or whatever. Anyone with a preference is going to take the first kind of stab at those assets, and then the rest of it will kind of flow down. Now, we will never ever negotiate a preference when we invest, and you could argue that that's to the detriment of us, because we also personally invest, by the way, in our deals. But Sharia compliance trumps everything, doesn't it? So our genuine view with this stuff is that we expect some of our startups to fail, and we are happy to, within reason, to basically wave goodbye to that capital, because we know, inshallah, that for the ones that do succeed, they will basically dwarf all of the stuff that that you've lost. And that's why it's important with startup investing to take a portfolio approach with it. So you shouldn't really be investing in one or two startups. You should try to make it 10, 20, 30, etc.
Correct. And Brother Ibrahim, if you can kind of move on from there, explain for the audience exactly what is portfolio investing, because they might be afraid of kind of losing everything if it goes bust. So what happens? What happens with their investment? Does it actually go bust if a particular startup goes, let's say, down? What happens?
Yeah, sure. So with a portfolio-based approach, you significantly minimize the risks of your portfolio returning a negative return. And the reason for that is because, as MOHSIN is talking about, because it's such a high-risk, high-reward industry, you want to have those big winners in your portfolio. So think of it as, trying to get as many bites at the cherry as possible, as many attempts on goal as possible. The more attempts you have on goal, the more likely you are to have a goal. And with a portfolio of, let's say, 30 to 40, you are much, much, much more likely to have a large exit than with a portfolio of just 2, right? With a portfolio of just 1 or 2 startups, I think you're basically gambling. I don't think it's very it's not very risk friendly as an investor to do that, unless of course you have really, really good information about that particular startup. But typically you won't when it's early stage. So that's what I would say. I would say that you should target at least 20, 25 plus companies in your portfolio, and the closer that you get to 40, 50, the better, because that's where you make sure that you're going to have at least 1 or 2 or 3 massive outliers in your portfolio, which will make everything worthwhile.
Yeah. Okay. Okay. And what has been, obviously it's just early days, but what has been your experience to date? If you kind of speak about this kind of 2020 experience.
Sure. So we have been operating as a syndicate for probably about a year or so now, and I would say very actively since probably the early part of this year. It's too early for us to be talking about things like exits and that kind of thing. But inshallah, you don't know when something is around the corner. But in terms of the investments that we've made so far, there've been some really, really, really interesting ones. I'll talk about a couple just to give you a flavor of the kinds of things that we've invested in, which might be helpful for your audience. So one that comes to mind that we did earlier on in the year was a Series A investment, so kind of on the later stage of what we typically invest in. And that was in a company called QuitGenius. And QuitGenius they came out of Y Combinator a few years ago. And they're basically a tech solution to help with giving up addictions, so things like smoking. And they operate as a business-to-business company. They basically sell their technology into other businesses because, particularly in the United States, where employers cover health insurance, when employees are smoking, that bumps up the premium. So there's a proper saving to be made for employers if their employees can use QuitGenius's technology and help them to quit smoking, and they've done mashallah really well. Muslim founders as well, by the way, and they've got proven studies that show that their technology helps improve your chances of quitting smoking. So mashallah, they were doing really well. We were absolutely delighted to be able to invest in them and support them. And in that deal, we invested alongside the Williams sisters, the famous tennis players. Bill Gates was Jeff Bezos are investors in them, and a whole host of really interesting VC funds, as well as obviously Y Combinator themselves, because they invest too. So that's an example of a kind of slightly later stage company that we've done. And then a good example of a very early company that we invested into was a company called TrustShare. They are basically, without going into too much detail, they are doing escrow payments and kind of making a market for that and making that much easier than it already is. And the way we came across that was really interesting, because we were actually looking in the market for this kind of thing for some of our own stuff, and we came across TrustShare. We spoke to the founders as a potential customer ourselves, and then the conversation quickly turned to are you guys are you looking for funding? And it turned out they were just about to start their fundraising, and we were able to turn that very, very quickly. We committed early. And alhamdulillah, once we, because we acted fast and we got our money in fast, that helped the company. And since then, they've gone on to raise money from some very, very prominent angel investors. So people like Alex Chesterman, who founded Love Film and Zoopla, the Barclay brothers, and people like that. So we were really, really delighted to be first money in there. So that's a flavor of the kind of thing that we're doing.
Okay, mashallah, excellent. And I'm sure the audience would be delighted to kind of hear these stories, and inshallah, may Allah make these stories beneficial for all of those who are investing, inshallah.
Ameen.
Okay, now my next question is that, let's say if a person decides to kind of invest, let's say 2,500 quid, he wants to invest. So how does he go about doing it? What are the kind of administrative or any service fee he has to pay, etc.? So what is the kind of the process there?
Sure, Brother. Okay, so the way that it works is they just sign up at ifg.vc and they create themselves a login there, and that makes them part of our email list. And whenever a deal is ready to be launched, we will send that around to the list. Now, in terms of how it works, we've got a subscription-based approach where you can be a member and you get priority on the deals. So you see the deals before non-members. And our deals are typically very, very popular, so they go very quickly. So being a member is advantageous from that respect. And then you will pay, if you're a member, which, by the way, costs £54. It works out per month. So you can buy an annual subscription, and you will pay a 3.5% admin fee as a result of that whenever you're investing. So let's say you're investing, I don't know, £5,000 into a startup, you would pay £175 as a cost of that, as the admin fee. And if the startup succeeds, then we also charge 5% of the profit that you make at the end of it. And if you're a non-member, on the other hand, you can still invest if there is space once the deal has gone to members, and you can you would get charged a 7% admin fee. And if the startup succeeds, then we would also charge a 7.5% exit fee. So the fees are more on the non-member side, and they're less on the member side. And if you become a member, you get a whole host of other benefits as well. So priority on the tax benefits that UK investors in particular benefit from. You get a free UK Islamic will. And you get access to the deals earlier. Plus, you get access to startup course material worth up to £300. So there's a whole bunch of different benefits that you get from being a member. But I think really simply, the best way to learn how the whole thing works is just sign up to the Angel Syndicate see a deal, and it'll become very clear to you how the whole thing operates.
Okay. So I hope, inshallah, this will be clear, and I assume that all this information will be available, updated on the Islamic Finance Guru website, inshallah, for people to go see, ask any questions on the provided platform, etc. Now, I'm also assuming that you are looking at, for example, bigger infrastructure projects as well, somewhere down the line. Obviously, it's mostly the startup environment, as Brother MOHSIN has mentioned, is tech-based. But are you looking at bigger infrastructure development projects like mall developments or something of that nature? Is that somewhere down the line?
Yeah, exactly. I think that's definitely a lot further down our. I think the first thing that we need to crack is the venture world.
Correct. Okay. Now, the kind of, before we start on the audience Q&A, one particular benefit which people normally try to derive from their savings and investments is a product called prize bonds in certain Muslim countries. Now, I would like to ask you, have you heard about this product called prize bonds or bonds, not bonds as the government bonds, but the kind of the prize bonds which normally people buy? That is my first question. Do you heard?
Yeah.
Okay.
Yeah.
So what is your view, and are they can they be halal? How are they structured? Can you tell us something about that?
Yeah, sure. So I think in a nutshell, they're not permissible because you're not really. It's essentially betting, right? Because you're putting in money and you're hoping that you'll make a bit of a return on it. And there's no certainty as to if you will or not. It's not linked to the performance of any investment. It's literally just based on chance, and that would be just in a very uncontroversial way. It would be not permissible. It wouldn't be halal. There are new, I think, versions of it that have come out in the UAE that try and structure it in a way that is Sharia compliant, but I'm not convinced very much by that approach, and I'm not sure that a lot of the other scholars who've looked at that model think that works. So in a nutshell, probably best to stay away.
Okay. And the reason I've asked is because especially in Pakistan, there are a lot of people with a bit of money to spend. They actually, what they do is they try to kind of buy prize bonds and then try to win something over the next 6 months or a year. So my suggestion to all of those who have kind of a little bit of disposable income is to try out, this mode of startup funding, this mode of startup investment. Do your homework, guys. See what are the options available to you. Take cue from other kind of people within the finance world if you are not finance literate, and then grow up. Yani, we need to, within the Muslim communities, what we need to really do is to grow out of our traditional way of thinking. That's one serious issue we actually are having. And mashallah, I think I'm senior to both of you, so I can assure you that myself, I've had to revamp my entire psyche, during the last kind of 2-3 years. For the simple reason is because we have to go with how things are being structured nowadays in the financial world. Obviously, having everything in a halal way, in an Islamic way. I was of the view that stay away from everything, but now I'm of the view over time is that yes, do your homework, be very careful, be cautious, but again, try to do the right thing, inshallah, and try to find avenues where you can actually have halal investments. Now, kind of my last question before we go to audience questions and answers. What is your latest research on this subject, and how do you see Islamic venture capital coming along in other parts of the world? Are you seeing other kind of startups coming into this space? What is your experience?
So our experience of the market, and based on kind of everything we've said, I guess we should hone in on, I guess, like the specifically Muslim part of what we do. So the way to think about or at least the way we think about the Islamic element or the Muslim element of what we do, is there are two ends of the spectrum. One is that we are democratizing access to venture capital, full stop, for Muslim investors. So I think that everyday kind of person, well, to an extent, everyone who has the relevant capital to be able to invest in this stuff has access to it, where they wouldn't ordinarily have access to it. Because if you are someone who's trying to invest in, to be an investor in a big VC fund, for example, you'll probably need to commit millions, but you can't really do that. So we are democratizing access for ordinary Muslim investors, and then on the other side, we're trying to create companies which are going to be massive, and ideally, we probably want those to be Muslim founded, and the way that we think about this is, if we have this ecosystem which is continuously investing in startups, and we have some successes there as well, whether they're Muslim founded or not, that is contributing to the to the Muslim ecosystem at large, because we can encourage people to become entrepreneurs, etc. And actually, entrepreneurship isn't for everyone. But if we can encourage someone who is going to be successful to take that leap of faith and create an environment where startup funding is more accessible, then we will have done a good job. And to come to your question about what are we kind of seeing in the market, what we're seeing, particularly in the UK, but I think, to be honest, globally, are Muslims who are increasingly confident about wanting to see a different kind of world. When I think about, particularly here in the UK, when I think about my parents' generations of people who came over from the likes of India, Pakistan, Bangladesh, these were not people. I mean, they did an awful lot of fantastic stuff, but they didn't necessarily have the education or the resources or the I guess the environment to want to change the world, and they've managed to create an environment where I think our generation are in a position to be able to do that. So what I'm seeing are Muslims who are increasingly confident. They've increasingly got access to capital, although that bit of it isn't quite as good as it probably should be. And I think what we want to do is really try to help. I think if you're asking me candidly, what's the market like when it comes to Muslim entrepreneurs, I would say that unfortunately, overall, the quality is probably slightly lower than the average non-Muslim entrepreneur. That's not to say that there aren't brilliant Muslim entrepreneurs. There are, but I think we want to increase the overall quality of Muslim entrepreneurs. So there's a whole wider piece about everything we're doing, which is around education and just creating this system where Muslim entrepreneurs can feel confident about their own success. So that's basically what we're seeing. We're seeing lots of talented Muslims coming through, and we're seeing the mindset is that we can change the world.
Okay, mashallah, excellent. So jazakumullah khair to both brothers Ibrahim and Mohsin. Now we'll inshallah start taking the audience questions. So the first question is that, let me just change. Normally, what is the size of the deal you look for? What are the sectors? What are the success rates? I think we've discussed it overall, but if you can do a summary of this, Brother Ibrahim, please.
Sure. So normally the deal size that we're looking for are between where we would be investing tickets of somewhere between 150 and 350,000. Typically the rounds are somewhere between the 500 to 2 million mark in terms of the scale of the round, although we've done larger and smaller. Sorry, I think the rest of the questions, they've disappeared from the screen.
Back up. Just give me a second. There you go.
And then the sectors that we look at, we're sector agnostic. We don't really care about the sector as long as it's halal. That's the key thing. And what is the success rate? We haven't had any exits. We haven't also had any startups collapse yet. So it's all to play for. It's early days. And inshallah, I think that one key indicator is that we invest with a lot of leading investors. So if we're wrong, they're wrong as well. And they're professionals. And then second thing is that we've had a few companies who've had some up rounds. So that means that we've invested, and then a few years later, they've actually done well and then raised a larger round at a higher valuation, which indicates that they've made decent progress, and we were right to invest in them the first time. So that's some brief thoughts on that.
Okay, mashallah. Brother MOHSIN, this one maybe you can take this. Are the investments in fund structure or deal-to-deal basis?
Sure. So at the moment, it's all deal to deal. So when we send emails out, people can literally pick whether they want to invest in that deal or not. Fund structure is inshallah on the horizon.
Okay, so soon inshallah. Okay. Also, I think there is an advice from a brother. He's a good friend, Brother Imran. Brothers, you should go seminars with like-minded people like as writers. I think this is being done. So you can talk about exactly the the podcast and the various kind of seminars and stuff you've been doing, brothers.
Yeah, sure. So we've got a podcast, Millionaire Muslim, and we've got our YouTube. If you just type in Islamic Finance Guru, you'll find it. And we've interviewed people like Primary Finance, and we regularly interview lots of other people. Including upcoming will be Sheikh Haytham Al-Haddad. We'll be interviewing the guys at Wahid Invest and many others. So it's all to play for.
Okay, excellent. So Jazakumullah khair once again, our player in our honor, Brother Ibrahim, Brother MOHSIN, and for the audience, inshallah, we are hoping that this information today, which has been provided, is not only going to help the new Muslim entrepreneurs who want to enter into this space, but also this will provide all of you with an opportunity, inshallah, to have other avenues of investment where you can actually have a portfolio of investments, inshallah, which actually can make, I won't say break for you, but make for you, inshallah, some money down the line, 2, 3 years or 4 years down the line. Think slightly longer term. Startup funding is not short haul, as Brother MOHSIN explained earlier. And before I kind of call it a day, moving forward, just a couple of announcements to make. So next week, alhamdulillah, we are having brothers from Wahid Invest, and Wahid Invest is a pretty good platform as far as the equity financing is concerned within the share markets, within the commodity trading, within the real estate, the Islamic products like sukuk, etc. So 2 brothers, inshallah, will be from the management team, will be with us. Jazakallah khair to Brother Ibrahim for arranging that for us, alhamdulillah. So look forward to that show, inshallah, next week. And like I said, that our season 1, the last show is going to be next week, inshallah. And beyond that, we will be requesting you to contribute towards letting us know what type of topics do you want us to discuss moving forward. In season 1, we have covered all the way from marriage to Muslim women, to Islamic finance, to an entrepreneurship, etc., to homeschooling, Islamic schools. So we have done quite a fair bit. So now season 2 onwards, inshallah, which will comprise of roughly 18 to 19 episodes. Again, we will be requesting you to share the topics, kind of the speakers you would like us to bring to the forefront, inshallah. So Jazakumullah khair once again to Brother Ibrahim, to Brother MOHSIN. May Allah reward you. May Allah, inshallah, increase your sustenance, increase your risk, and increase the risk of all the people who are investing in you, inshallah. Jazakumullah khair once again. Subhanakallahumma wa bihamdika. Ashhadu an la ilaha illa anta. Astaghfiruka wa atubu ilayk. Wassalamu alaikum wa rahmatullahi wa barakatuh.